Hello, trader nerds. Welcome to the program. How y'all doing? No, I'm such a degenerate. I took 4 gummies last night. Now, y'all remember when I was taking the hemp gummies, right? So I ran out of hemp gummies and I took something last night. What are those things I take? What's that stuff supposed to make you sleep? Melatonin. So the maximum dose was 2. And I was like, man, I just am tired. So I took 4, which is typical undisciplined person, what we do, right? We overdo everything. I don't know what was in those things, but man, I literally just rolled out of the bed. I mean, just now. I got me a shower and I'm not even in my underwear. Well, I got underwear on. It's just I'm in my shorts. So I missed my workout. I missed everything. And I'm eating breakfast right now. Unbelievable. And then the first thing I do is read my emails. And then you ought to get on the CME notice thing, I guess register with the CME or something for their little update. And they'll tell you like if the market's up or down 1% or 2% or the round numbers, right? So I got the little thing that the market was down 2%. And I'm like, well, of course it is. It goes up 2% yesterday. So it's got to be down 2% today because the market is bipolar right now. And that's just what it is. It's just up and down. So, a lot of indecisiveness. We have about the same volume, looks like we had yesterday, if I remember correctly, about 9,000 contracts every 2 minutes being traded. So, it's doing what it is. AD is negative 411, so it's very, very weak. Notice that the overnight low is serving as a little bit of support, a little bit of resistance now. So is VWAP, maybe a little bit of resistance here. And VIX is down to 32. How about that? So VIX at 32. Look at this. The AD low is negative 499, so we're at 412 now. So we've been kind of trending upwards, and you see the market doing about the same. Right? And for those of you who love little trend lines and all that kind of stuff, you can, well, I see we'll have additional support. Oh, where's my trick? Here we go. We'll have additional support right here, when you start drawing those little lines. Look at that. Isn't that pretty? So it may come down here and then bounce back up. So, now watch. The big green monster, though, is doing its cool thing, right? Yeah, it's a good resource. All right. So here's our big green monster. No surprise that we're having the battle on our 180% line as price tries to decide, am I fairly priced or am I oversold? So, this continues to be a bit bullish here as we expect price to travel upwards to fill some of this gap and maybe come back toward this 50% line here. Now, and you know what I'm going to say, as we dangle more here, our point of control will likely move here, right? Which will be a natural attraction for price to go. So slightly bullish on the chart, which means the market will probably drop and tank another 2 or 3%. As we say, it's bullish. All right, let's go to our, what do you call, linear regression. Linear regression, remember just a couple of weeks ago, we were pointing down and now we're just basically flat. We come to the bottom, we're at the bottom, we're at the bottom again. So, we would expect maybe a little bit of a bounce off the linear regression too. Of course, it really doesn't matter, right? What really matters is, us just playing the probabilities and doing our thing. So let's do that, shall we? So let's see how bad we're getting hit today. And it hurts, y'all. I know we look at the net lick. The net lick is the all in all of how we're doing. And when it's down and we're getting hit, it hurts. No doubt about it. I don't like recording it either. But remember, if my accounts go to 0, I'm fine. It's not going to kill me. I'm going to be upset, yeah, but I'm not going to, I'm not going to jump out the window. So y'all remember, I got a higher risk tolerance than a lot of people. So we're down $171 on the day. Whammy. Right now we know we're going to be down more on the what do you call IRA. That's fine. Let's go check it out. 929.22. How are we here? We are at Bobby. Why don't you show us exactly what it is? How we know you're not lying? You don't know I don't lie, but I think by now y'all know that Yeah, pretty consistent. I show y'all the good, the bad, the ugly. So we're down 754, which isn't bad, right? We were up 2,300 yesterday, so we're only down 754 on this move down. That's good. And remember, we put in a little hedge yesterday, which was kind of cool as well. All right, so everything's looking good. I got no real big problem children. And if you ever start feeling real bad about yourself, just go to this little thing right here. All right. And remember, here's how I kind of gauge how I'm doing. How am I doing in comparison to the S&P 500? Right now, here's where I come and get my little bit of, hey, this makes me feel good. I refresh the price of SPY. So the market itself is down 18.63 in the same time frame that we've been tracking here, right? And I'm down 2.92%. Wow. That's overperforming in my opinion. I'm doing well. Let's look at the other account. The other account may be much worse. Let's see. So we go to the realized returns page. I'm down 6.55%. How's the market doing in the same time period? The market is down 16%. Wayne. Wayne. All right. All right, let's go get our Greeks and ratios. So I feel good about that. So don't beat yourself up too much. You know, how am I doing in relation to the market? So if I was not doing this, I'd be at 100% S&P 500. That's just what I do. That's what I've done from the time I was a teenager, Jacksonville State University, working for the federal courts, you know, till I retired a year or two ago. No big deal. All right, so let's go see what our Greekies are. Greeky. Let's go get them. Get them. Gotta go. All right, so our deltas, let's do the other one first. Our deltas are 51.79. Okay, Bob, 51.79. I'm 13 too long. Man, right? Not a big deal. Our theta is 41.93. 41.93. I'm just fine. I'm just perfect. I'm just great. What do we say? VIX is at 32 today. No. Our buying power usage is 52.99. Okay. 52.99. We know we could be using as much as 40%. We're using 20% of our buying power. Wow. So as we look at this, I see a very healthy portfolio. Does anyone disagree with me? Now, if we were using tasty metrics, right? If we were using tasty metrics, I could have even higher deltas, right? But I'm more conservative. So the fact that I'm 13 out of line is no big deal to me. So I go to the decision tree. Is the market up, down, or flat? Well, the market is down. Do I make a new opening trade? It tells me no, Bob. Do I close the trade? Do I have any profitable trades? Well, I think we know the answer to that, but let's go look. Now, you trade managers who are not portfolio managers are going to be flipping out. You're going to go, oh, it's down 200%. I got to close it. Really? I wouldn't do that. I'm just, you know, you're down 362%, you fat black glass underwear wearing Elton John 9-toed bastard you. I got it. No big deal. But I don't play that way. Now maybe the way you play is better, but no, I don't have no open trade. So then it goes, no, I ain't got no profitable trade. Am I comfortable waiting and doing nothing? Well, with these Greeks and ratios, yeah, I'm comfortable. So here's what it's going to tell me. It's going to give me the reassuring. I wish I could make it play raindrops or something, you know, have a little rain effect here. Dear Bob, wait and do nothing, you fat slob. Who slept till 11 o'clock today, 11:30 actually, and then hit the snooze button till 11:45. No, wait and do nothing. You got nothing to do. Okay, let's go to the other account. Well, first, before we do that, let's analyze our trades, right? Let's analyze. We've got all this stuff going on here. So let's analyze our trades. We got 1, 2, 3, 4, 5 trades. So let's go look at them. Analyze You want to hide your simulations. Always do that, even if you never put in simulations, because sometimes it messes the stuff up. Then, put in the symbol that we're trading here. Single symbol, and this shows all groups. So let's put our day on today. Put this on today, everything. And that just changes the standard deviation. So as I'm looking at one expiration here for whenever this expiration ends. So right now I'm down $596, right? If we hold here, we're going to be up $644.25 by October 22nd. What if we get another 5% down move? Okay, we're taking a little pain, right? At expiration, now if it happened today, we'd be down $2,000, but at expiration we'll only be down $715. This is the power of our little hump to the downside. But let's just evaluate, shall we, our little trades here. So the 11118, does that look like a trade that's in trouble? Not yet, right? We're down $142 on the trade. It will be up $305 if we stay anywhere within this long area. So what you do is, you go, how's that going to look in a few days? 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, 8 days, 9 days, 10 days, 11 days, 12 days, 13, 14, 15, 16, 17, 17 days from now, if everything works out good, we're up $42 on the trade. Let's go back. Okay, so 11118 looks pretty good. How's our 11119? Well, we're just barely entering the profit team. Isn't that what we want? Go in the profit team? Yeah. So we're down $100 on the trade. Big deal. Let's do the 11120. Oh, behave. Yeah. Look at there. Raindrops keep falling on my head. Ken, that was a good one. So we're not even in the profit team on 11120. Look at there. 11121st. Oh, please. What's the problem with that trade? It's a beautiful trade. Even if we go down 5% from here, we're not even fully into the profit team. Now, let's go back to Little Miss 11117. Oh, steal my heart. This one is down $222.50. Okay. So we got decisions that we can make here. Now this trade has, let's see, 11117. This trade has, I think, 22 days left in it. Let's go find him. 11117 should be our oldest trade, right? 11117. Okay, so we got 22 days left in the trade, and we are close to the strike, right? We're close to getting breached here, but we're not there quite, right? We're at 36.56, so we got 15 more points before we get breached here. Now, earlier today, heck, what was the low today? We probably did breach the strike, right? So I think, based on my conversation with Ed and Ken kind of reaffirming it, and what, because I don't have to do a lot of trade management most of the time. Most of the time, I don't have to do anything. But we kind of figured out that maybe our best practice is going to be, when the strike is breached or near breached, is that we're going to roll this out. So we're going to close the naked component. We're going to take our loss, and then we're going to roll it out in time to just give us a little more time. Now, or if it makes you feel better, take the loss of $222 and just go on. Eliminate the stress. So the strike is not breached. We're about 15 points to being breached. I don't think I'm going to do it today. We may get another down move tomorrow. We'll look at it tomorrow. Now, by tomorrow, we may be down here. That's fine. That's a risk that I take. But based on what? I'm not freaking. And based on what? I'm based on my Greeks. My Greeks are fine. I got no reason right now to flip out.
Bobby,
yeah.
It occurred to me as you were going through what you saw and what you were thinking of doing.
Mhm.
It hit me, and I haven't thought about it other than a few seconds, converting it to a 1-1-2. You eat the loss on your short, your naked short,
Mhm.
then you go out further down in the money, and and sell two puts to make up for the loss, or at least get enough, capture enough intrinsic value that you can save this trade as is. In other words, mitigate or remove the loss. It's just
So in
a
other
thought.
words, you could do it in the same expiration, right? Instead of
Right.
rolling it out in time.
Yeah, go down in price and sell two, turn it into a 1-1-2. That'll give you more down room. Now, I haven't thought of this other than just what I've told you. It
Mhm.
hasn't gone any deeper than this because, you got expectations maybe where the market's going, and I'm expecting a low on Friday. So, this might be risky. You just might want to eat it. I don't know. That was just a thought. Turn it into a 1-1-2, but by exiting your bad short here, and then go sell two more puts lower down on the strikes to make up for that. Just an idea.
Okay, let's kind of look at it, right? So if we did that, and I think a lot of people, I think Ed, you brought that up before too, of converting the 1-1-2s. I think there's some talk in our 1-1-1 channel that folks have done that. So, that's something certainly we could do. So let's kind of look at the debit and credit of that. So if we did something like that, right, it's going to cost us $517.72 to get out of that trade. 517.72 to get out of the trade. Let's just remember that. That's if we were to hop out of that. So then we would need to go. That's a lot of credit, isn't it? At 103. So we go 22. Where could we go to do that? 103, 50 something. You're looking at going down to, let's say 103 to the 3490. Let's say 3,500 here. Let's just go 3,500. So selling two of those. And this will be a cool little thing here. So we would get 537.06. Y'all see how I did that? I did that quick, right? I just kind of did it in my head. If I'm selling it for 103 and I'm going to sell two, I got to bring in, enough to, to cover the loss that I had here. Now I know what some people watching on YouTube will say. They'll say this is a martingale strategy. You just double. I got it. I got it. I got it. I know what you're saying. You ain't scared me. But what we're doing is moving the risk farther to the left, right? Taking the loss on the current position and reestablishing the other position farther down to the left. So why don't you and why don't we do this? Why don't we, analyze? All right, let's analyze. All right, so here we've got let me show all. Make sure we're just showing. Now let me do this. I'm hide positions, make sure this is the only position that I got here. Yeah. All right, so here would be let me change this to MES, so it's got all my price slices. There we go. So if we're just looking at the new position, then this is what it looks like, right? So here's current market price. So it moves our break even down, past another 5% down, right? Moves us another 5% down, which is kind of cool, right? It moves that risk further down. So let's now go and bring in our position. Show all. So let's go back and show our existing position. Here's our existing position, right? So we can take off the naked put. What's this? So our break even now is at what? That's 35.77, 35.78. Y'all remember that? Someone remember that? 35.78. If we take that off and put in our new position, then look how we look. Ken, isn't that gorgeous? Then we moved our break even down to 34.26. So we were at what, 35.78? So we moved that down to 34.26. Now that is pretty. Ain't that pretty? And then look, you're kind of right at the center of the whole shebang here. Martingale does not have time decay. I like that. I like that. You know, I kind of like this. Ken, look at you. You know, Ken just sits on the sidelines. Next thing you know, he's got his own channel in our Discord room. Then all of a sudden he's like, you know what? I'm gonna delete my channel. And I'm like, why'd you delete your channel? Oh, what I'm doing is so much different. And then the sage advice comes on in and just says, you know, Bob, isn't that great? Now for ever give me, there's a gotcha, as Dr. Jim constantly reminds us. Now, what's the gotcha? Well, your nail, instead of being short one, you're short two, right? You're increasing your risk. And it would be interesting to see, you know, what this does for our buying power and all that. It would be really, really interesting to see. Well, let's see if we can show all now. Let's do, let's see if I can see what our buying power, see if this is anywhere close. Let's do this. Let's now go show everything, all groups. See if I can do this on the fly. So we've taken the 3640 out, and we should have the 1, 2 there. And it says that my buying pair is 63.17, right? 63.17. Our theta, our delta went to 58. Let's look at that. Our delta went to maybe 58. No. Our theta has gone to 52. It's increasing our theta. And let's see what our buying power goes up to. It says our buying power theoretically is at 6307. Let's just pop that in and see how we're doing buying power wise. 6307. So we're at 20 now, 6307. You're 24%. We certainly could absorb that. You know, interesting, very, very interesting, very, very, very interesting. Don't want to do it. I should take a poll now. Do it, Bob, or don't do it. How many thinks I should do it? Anybody? Anybody say don't do it, Bob? I don't know. I think what we're going to do, I think we're going to wait till tomorrow. We can do it on Matt. Do it. All right, Jim saying do it. I may just do a thing. Let's just do it. Let's do it. Let's just do it. All right, so what are we going to do? We're going to close the 11117, the naked component. And let's just see how our little, what do you call, let's see how our little profit tent itself is doing. Look at that. Isn't that sweet? So we expect to get, you know, in just a few days, $201.25 on that. So that looks really good. So we said we're going to close the 3640. Take that risk off. Close the 3640. Take the risk off. I want to be at the mid if I can. Remember, if you're buying something back, we want to buy it back as low as possible, right? 508.97. 508.97. So, yeah, 101.50. All right, y'all help me do this, because I'm gonna do it just like I would do if y'all weren't here, and it may take a while. So I close that at 101.50. So I'm gonna go over here, and I'm gonna make me a note right here in the 1117. So what I do is I'm gonna make it purple. So I know, you know, this is an unusual case, right? We didn't close the whole thing. We closed part of it. And then we'll come over here. I'm just going to give me a little note. Hey, I closed the NP naked put at 101.50 for debit of, let's go find it. Debit of 101.50 for debit of 508.97. 508.97. All right. So we know that we've closed the naked put. Oh, hold on, this will drive me nuts if I don't fix this. And put it there, and put it there. All right, so we know we've closed the naked put for a debit of 508.97. All right, now, why don't we do this? Let's go over here. And remember, yesterday, we had a problem children little thing that we come up with. So why don't we do this? We're gonna right click, we're gonna move or copy, and we're gonna create a copy, and we're gonna move it to our other spreadsheet. Right? Ta-da! If y'all didn't know how to do this, watch this. Ta-da! So now we go back to our little thing, and we got our little problem children on this one. So our problem children here is 11117. All right. Now, I know what we're live a little. John told me to wait today. Look at you, John. Stacy said do it. Now, Stacy said do it. Hell, I'm doing it. All right. So our problem child is 11117. Now remember, we're turning the 111 into a 112. Now y'all watch this. I'll be for y'all watch this. I'm going to say that we came up with a new trade today, and this YouTube video go crazy because people love new stuff. They love shiny stuff. So it's kind of a clickbait thing. I'll say we found a new trade, y'all, and everybody go nuts over it. It's nothing new. All right. So our initial trade brought in a credit. The initial trade brought in a credit of, let's do this. Our initial trade, we brought in a credit of 51.84. Let's go do debits and credits. 51.84. Okay. We closed the naked put, and it cost us a. I said we. What the crap is this? Oh, wrong thing. We closed the naked put, and it cost us a debit of 508.97. Problem children. 508.97. Okay. Now, so then we're going to sell a naked put. Let's see, sold naked put to NP. How am I going to do this? 2 NP. We're going to sell 2 naked puts. We'll call it 2 NP first. And we need to collect more than the 508.97. So let's go find that. And go back to my analyze tab. In one group, 117. So I'll say, so we said we were going to sell the 3,500. And a good thing about 3,500 is it should have really good. We're not getting as much credit. Let's see if we can get enough. Right click, confirm and send. What the crap? What am I doing wrong? Getting a credit of $97. Way go, Ken. It shouldn't be 3,500. Then let's see. What am I doing wrong? Show all single symbol 117 minus 2 3,500. Did I move this or something? Yeah, something's wrong. Something. Oh, look at this. All right, let's go back in here and find it. So we closed the other one for 501 something. Let me find me something. Yeah. Now, you know, another thing you could do too, right? Because I don't even have to do this in the same cycle. I could still roll this thing out. Right? Everybody with me on that? Look at that. Look what the bid-ask spread is on that thing. No wonder that one went crazy. The 35.20 looks a little bit better. But boy, we're getting some wonky stripes here. Here, 34.90 even looks better, doesn't it? Look at there as far as not having wonky stripes. So if we sell 2 of these at the mid price, we would bring in 502.06. That ain't enough. 502.06 close. Let's move it closer. So what we got to do is move this a little closer. But yeah, there's no doubt I could move this farther out of the money. 53.25. That looks better. Unbelievable. Look at that. $10. Surely we could get it there, right? Let's see. Yeah, that would do it. So we could do 2 of them there. See if we get filled. Yeah, we got filled at 53. Now it makes me mad I didn't try to go for 54. Oh, look, Ken. Way to go, Ken. I didn't say that. Coach says exit in the naked put today, but wait for the next down move, place a new short, and you can do that too. Right?
Mhm.
And Ken said, sell one short day, do another one tomorrow if the market goes further down. Yeah, you can do all that stuff. All right, but I made my bed and I'm gonna let you. Right? It's just another management technique, and I kind of really like this. So we sold 2 naked puts at the 3,500 at 53. So let's go put him in. 2 at the, how many days expiration is that? 22. So we'll go over here. We've got a whole little thing baked in here where we can do that, right? So we're going to do MES, do 2 tranches, 2 contracts, and we're going to call this the 2 naked put first, because we did 2 of them, right? And it's just a naked put first, and we did the 3,500, was it? Hold on. We did the 3,500 for $53. 3,500 puts. Naked put. 22 days out. Entering on 9/29, 22 for 53. So we brought in $527.06. Let's make sure that's right. Make sure I always got to check my formula sometime every now and then. 527.06. Yep. So now let's go put him over here in our debit and credit thing, right? Problem children. So we brought in a credit of 527.06. God, what a great analysis this is. All right. Now I need to put in, well, what is my expected credit on the put debit spread? Right. So on our put debit spread, let's go back over here, analyze tab, and our put debit spread. Let's make sure everything's on tap except this. So on this put debit spread, you see we expect to make $201.25. Now let's decrease that a little bit for commissions that we're going to do to probably have to close that. Now I'm going to double check with Thinkorswim because they're telling me, oh, if both of them are in the money, if both of your strikes are in the money, how do I know both strikes are in the money now? Because here's a strike, here's my short strike, here's my long strike. Remember, I taught y'all how to read a risk curve, right, in the past. Here's my short strike, here's my long strike. They're both in the money. So Thinkorswim tells me, oh, Bobby, it'll settle, to your cash in your account. And there's no exercise or assignment fee. So I need to double check with them. I want to pay those. But let's just reduce this by $10. Let's say we're going to get $190 on this particular debit spread. Okay, so let's go put it into our little calculator. So we're expecting to make $190 on that. Okay. Anticipated close of second NP1. Let's open a new PDS one. Okay, I didn't do that. We're not doing that on this one today. All right. Here we go. So anticipated close of this trade of, I need to change the name of 2NP first. Of 2NP first, whatever we're calling him, right? 2NP first. So what would I close that at? Okay. So that means that I need to have a debit to close that of something that would equal less than 768.90. So 768.90. Y'all help me here. 768.90 minus 508.97 means that my debit would need to be 259.93 for this to equal, right? 259.93. Okay. And that would be equal my debits and credits, and I'm out of the trade at a scratch. So let's say you want to make, what's my average profit on a trade? Well, we could do that, I guess, but say I want to make $50. So we could close this thing at, when it gets to $200, make $59 on the trade. That's where we want to be. Let me change this to yellow. Just kind of know that's the one that's kind of fluid in place, right? so that we would make, 50 or 60 bucks on the trade. So the anticipated close. And the good thing is, all things being equal, if we don't get too much of a move down, what could happen is that we should have, well, I mean, we're at 22 days to expiration. All things equal, we should have a pretty rapid decay of theta in that particular account. Isn't that cool? I like it. I like it. Now, if you want to be a little bit safer with that, what could I have done? I could have also rolled those two out in time. Wow, that is really, really cool, right? Really, really cool. So we call that the 2NP first. So I'm gonna make it purple to kind of let it me know, hey, it goes with that other trade, right? It's something that I'm working with that other trade. So let's go name him 2NP first. Go here. I'm allocating and move to group 2NP first.
I'll be out of curiosity. If you rolled it out to the next expiration, what would be the premium difference?
To that same strike?
Yeah, let's keep
Okay.
it simple. This
Yeah.
is, after all, a lesson, a demo.
Yeah. So let's go, you'll go out just 1 week or?
And whatever. I just want an idea of what you could expect.
Mhm. So if we rolled it out an extra week, right, that would have brought us in 3,500. Oh, a good bit more. So Nat to the mid, let's go there. Would have brought in $628. 627.
Yeah.
Yeah, for an extra week, right?
Mhm.
Now let's, out of curiosity, we always say that word, right? Out of curiosity, let's see what our overall buying power is now. Buying power 62.54. So it did cost me a little buying power. 62.54. About what, $1,000, 62.54, but my account certainly can take it, right? We're at 24%, we could be at 40. So I don't know, y'all. Let's just kind of compare two. Let's see if our deltas and our theta did do what we expected them to do. Our delta exactly, it did exactly what we expected to do. So it did increase my deltas, right? And it did increase my theta, 58 to 52, just like we said in the simulation, 58 to 52. So we know that our simulation is, and this is a good thing, y'all. Some of y'all are gonna have to rewind this and go back and see how I did the, hey, what's it gonna do to my Greeks and my buying power? I did all of that analysis before I put the trade on. Did y'all see that? I did all the analysis from the Analyze tab. And then we just confirmed to see, well, were we correct? And yeah, we were correct. So, at 52 now, does that make me out of line on my buying power? No, I'm good. I'm really good. Now, I did add risk. You certainly know I added risk. Theta is a measure of risk. I added theta. That is a measure of risk. Boy, that is a great analysis. Ken, thanks for bringing that up. And for nothing else, I think it's good. I'm willing to take the risk. So it's good for y'all to see this as yet another management technique of a problem child. All right, let's go to the second account. Hard to believe we ain't even got to the second account yet. Some of y'all's like, oh, behave, I'm exhausted. Some of y'all need a cigarette. I got it. So let's go see let's go see the second account. Have I put in the Greeks and everything yet? No. All right, here we go. So our Greeks in the second account are 238.42, 238.42. I'm exhausted myself. I'm going back to sleep. Take me a nap. Just have been up for 30 minutes. All right, my theta. So we're 90 short, right? Or we're not too long by 90 deltas. Okay, wing. So 203.73. 203.73. Crap, Bobby, come on. 203.73. So we're at 0.21. We're getting close to our upper level where we're comfortable on risk. VIX is 32. Our buying power usage is 29.022. 29.022. All right, so we're using 29%. We could use 40%. Our theta's fine. So 2 out of 3 metrics are totally fine. Let's go to our decision tree. Decision tree, market up or down. Market is down. Not making an opening trade. Do I have any profitable trades? Let's just go look. We know we don't, right? Well, it's not true because we have some trades that will be profitable because we've got a naked or we've got a put debit spread by itself. Look, even our naked put is profitable. You know, I mean, so even though we've lost 400 today, we're still up $131 on that naked put that we rolled to yesterday. Now, market's down big today. We can even do the same thing to this, right? We can still roll it down if we want to, make two. I don't want to, but I just wanted you to see that. That's profitable. The put debit spread is profitable. Put debit spread one, that's down, that's down, that's down, that's down, that's down, that's down. Wow, look at this. Oh, this is the put debit spread that we did as a hedge yesterday. Remember that one? Yeah, this one. Look at there, y'all. We're up $33. How smart was that? And our remaining put debit spread is doing nothing but doing great. So let's go to our analyze chart here and see if we got any problem children. So we're going to hide simulations. Should we short all of our things, all of our groups, one expiration, make sure everything's right. So let's just go through really, really quickly. Naked put one. Okay. So we are not breached on our naked put yet. That's down way to the 36.12. If it gets breached, what are we going to do? We can roll it out further. Roll it out further. 929, 929. This only moves the standard deviation up or down. Not a big deal. Yeah, so we're fine with that. We're up on the trade a little bit. We could roll it down if necessary. No big deal. Naked put one looks fine. 11126. We're toward the top third of the little tent. 111. Look at there, y'all. Beautiful trade. Beautiful trade. 11129. Beautiful trade. Not even in the 10. Put debit spread one. We're up $36 on it. Wait. That was just an insurance policy we put in place yesterday. 112.55. Beautiful. Toward the middle of the tent, no problem. 54th, middle of the tent, no problem. 27th, not even fully in the tent, no problem. Now, remember the other day I lost the 111 25th? Well, it's because the 24th and the 25th were on the same strikes. So it put them in the same one. So I just got to remember that they're two separate trades. So it's instead of each one being a one trancher, it's lumping them as one. So we're up toward the top third of the tent, no problem. So again, 112.50th. What is this? Okay, yeah, we're toward the bottom third, but we're not near the strike, our naked strike, so we're fine. 112.50th. 111.28. Look at this. Not even in the 10. 112.53rd. Top third of the 10. 111.20th. Look at this beautiful put debit spread. Oh, is she gorgeous? 603.75. This is Pamela Anderson sitting at the old tiki tent going, hey, Bob, come here often? Well, you know, every now and then. Here we are. 111.20th. That looks great. 111.21st. Okay. Yeah, we're in the lower third. No problem yet, though. And again, where are our problem children? Our problem children are our 111s, not our 112. So now everybody's like, hell, I should have done 112. Yeah, in hindsight, we probably should. Matt, Bobby, will you just sell futures so we can get a big rally? Here's what I'm gonna do. I'm gonna sell a call today, and y'all know what happens. I'll get slapped in the face. Yeah, and that's exactly what will happen. I'll sell a future and get slapped in the face. Now, I still have permission to sell futures, y'all. But it would, the only time I'm gonna sell a future is if all hell breaks loose now. You got to imagine, here's what would cause me to sell a future. Let me just show you. Just because this is out of line, you know, I'm not going, this didn't get me too out of whack, right? I'm not gonna sell a future because I'm 90 deltas too high. Now I could easily sell a 51 and be 40 deltas too high. Now I might could do that. I don't want to say I'm not gonna do that. But if this, and this all get all out of whack, then I might consider it more strongly. It's still in my tool bag. But yeah, as soon as I sell a future, I'm gonna get smacked in the face. Y'all know what happened. All right, y'all, this has been a great session. And here's what I'm afraid of. I know that the sessions are long. I know that everybody just wants me to get right to it. I know that. And I know that's why a lot of people can't watch these videos. But y'all, there's people in the room, if they would spend the time to go through this analysis with us, they'd feel much more confident. And they're just not. And bless their little hearts, they're going to chase the next thing. So they're going to cancel being in the premium nerds and the trader nerds, and they're going to go somewhere else. They're going to chase something, and that's fine. You know, it's fine. But if you'll just take a little bit of time and go through this analysis, I mean, it's great that we're doing this. It's great that we're saying, hey, we're on defense right now. You know, we scored our touchdown. We've got our touchdown, and now we're playing defense. So defense isn't sexy. Defense isn't, you know, the most popular thing that you want to watch with football. You want to see the scores. But right now we're playing defense, and defense wins championships. Defense wins championships. Ask the 1992 Crimson Tide. Everybody thought, oh, Miami, man, Miami is the stuff. They got all these Heisman quarterbacks, Kozak, what's his name, Kozak and Homar, and whoever they were, and they got all these wide receivers, and we just beat the hell out of them, right? With defense, and won the national championship with Jay Barker before Jay Barker tried to run over Sarah Evans with his SUV. All right, thank you for the kind words, y'all. Y'all have a good day. I'll see y'all